back live once again. Teach Me Tuesday. You got yours truly, Gavin Abraham, mortgage loan officer here in Charleston, South Carolina, Summerville, Tri-County area. We got the lovely LaShawn Abraham. I'll let you introduce yourself right quick.
So, yep, LaShawn Abraham, sales manager and producing mortgage loan officer here in Summerville, South Carolina, serving the entire state of South Carolina and Georgia.
Mm. All right. And Mr. Wilmot Berry, tell us about yourself, brother.
Wilmot Berry here, local realtor here in Orangeburg area, serving my clients, helping them reach their real estate goals.
Sweet, sweet. So, guys, we've been talking a lot about goal setting, gearing the people up, I think, really for today's topic. Tax planning, W-2s rolling in, everybody getting excited. Everybody's like, man, I can feel, you know what's funny about taxes? People
What's
always
funny?
get excited about receiving money from the government, but not knowing it's really your money that you already gave the government.
That's right.
That you just told them to hold for you for the past year.
Give me my money back. Yeah.
Right, right. So getting excited about getting your money back. I'm excited. I hope the people out there are excited. But what we want to talk about today is, what are you doing with that excitement?
Mm,
What plans have you made surrounding the excitement of getting taxes back? Or in some instances, some people may be paying taxes, which, for certain reasons, especially for self-employed, our self-employed people, it may be necessary for you to be paying taxes because
yeah.
you have a goal in mind of home ownership. And in order for you to show the income that you need to qualify for the home that you want, you got to suck it up. That's just plain and simple. You got to suck it up for 1 to 2 years so that you can show the income you need to show without all these write-offs, and get that home that you truly want. So let's jump into it, guys. Tax planning and home ownership. Teach Me Tuesday, January 30th, capping off the first month of the year with talking about the excitement around W-2s and taxing and tax planning and how you go about that. So who want to jump in first?
Yeah, man, I got a funny story real quick.
Uh-oh.
You made me think about something, man. I was um transparent moment. Okay. I was talking to my accountant and I fall in that box. I gotta pay Uncle Sam, entrepreneurship. So EJ. And so pretty much she was like, Wilma, you ain't got no more write-offs? And man, you talking about trying to find a write-off? Oh boy, I'm trying to find one like it was yesterday. So, but it's a blessing. It is what it is. It comes with the territory. You gotta be able to make sure you put your tax money aside for all you realtors out there. Hey, you just can't spend it all when you get your check. You
Right.
got to make sure you put it away, part of that away for Uncle Sam, and but also keep good books. Keep good documents, man. All the stuff we pay as realtors in this business that a lot of people don't know about. With fees and dues and gifts and all kind of things that we do. Make sure you just keep good record of that and be able to show that to your accountant. To make sure, hey, if you ever get audited, you got the proof that
Right.
you did spend that money on those items. So
Now, one disclaimer I just want to give the people, before we start going too deep and diving in this thing,
yeah,
we are not tax professionals.
we are not.
We are not, and we are not giving advice that should not be validated with the tax professional before you go out and do anything. So
Consult with your accountant.
consult with your accountant, your tax professional before you go do your taxes, and before you say, you know what, Wilmot did say, or Gavin or LaShawn, they did say this. Well, they said it. They were talking about their own personal experiences.
Absolutely.
So
I mean, so okay, let's put some parameters now.
Yeah.
Neither of us are licensed to
That's right.
give, complete sound tax advice. However, because we have all worked in the industry, because we all are, work with clients that may be self-employed, we have experience with self-employed individuals, then, I feel like we're equipped to provide great sound advice. I mean, I
Agreed.
have a degree in accounting. Gavin has a degree in accounting. I have taken tax classes and I do my own taxes. So
Mm,
I can give you some advice, and I work with great tax people that I can refer you to as well.
mm,
That can
Absolutely.
also help you if you are looking for a great CPA, a great enrolled agent that can assist you. Because when you're wanting to purchase a home, especially if you're self-employed, even if you're not self-employed, we're going to talk kind of both because there are some things that people who aren't self-employed that they do on their taxes that hinder them from purchasing a home. And so we're going to talk specifically to self-employed people, but we're also going to talk a little bit for W-2 employees as well. So, one thing is kind of like what you guys said, have organized financial records. I mean, mortgage is all about documentation, mortgage is all about a paper trail. And so, we need to, one, make sure you file them because typically when you're trying to buy a house, you're going
Mhm.
to need the most recent 2 years of tax returns. Typically, now there are alternative programs, but for the purpose of this video, we're probably not going to go too far into bank statement loans or no doc loans that don't require tax returns. But if you're trying to buy a house the traditional way using tax returns, typically you need at least 2 years.
So, LaShawn, I'm gonna bring something up. We kind of briefly talked about this at the beginning. Well, I know this month we were talking about goals,
Oh, yeah.
and we were talking about goals. Last week we talked about planning, and this week is more so strategy, right?
Hmm.
It's strategy is the actionable steps, guys, that we take in order to reach our goals and in order for our plans to actually come to fruition. So, like when we are talking about these taxes and things of that nature,
Mhm.
we're really talking about an action that you can take, specific action that you can take in order to help you reach your real estate goals. Okay, so just like she said, I mean, here's some items that you might need to gather. These are some things you need to do. These are the things that you need to do in order for you to get you homeowner ready, home buying ready.
Right.
So we don't want to be out here, and I'm just letting you know, guys, know this. We don't want to be out here, looking at a whole bunch of houses and you're not ready yet. You know, you still haven't gotten your taxes ready. You still haven't done the necessary steps that you need to in order to get you ready to get in that house. So,
Yeah, I like that. So Gavin, so let's talk about just the beginning step, right? So one
Right.
of the things that we recommend people to do, especially if they want to buy a house, this year in 2024, before you file your taxes, and if homeownership is on your vision board, your goal list, like stop. Talk to your mortgage loan officer before you submit those taxes. And so,
mm.
Gavin, tell them about why that's important for us to look at their previous taxes before they file their new taxes.
Well, I mean, apparently, well, can't say apparently because you don't know what you don't know.
Mm.
So,
That's
guys, first thing, yes, we want to see a 2 year history to show us the the profitability of the business that you're filing taxes for and what your income shows. So, if your income was significantly lower because maybe it could just be because your business didn't make that much money, or in most cases it could be because you wrote off a lot of things to avoid paying certain tax liabilities. Which the first of all, I want to make sure I want to applaud you for that because that's what the tax system is for. It's for you to write off as much li- um, liabilities and income as you can, so that you know you can get out of paying all the same. No, I'm not joking, but
Mm-hmm.
EJ and everybody. But the tax system is designed um, for self-employed individuals. That was the whole design and thought process behind it. But the most important thing is when you file low income in 1 year, what we want to see, what we need to guide you in is where do you need to be if you want to buy a $300,000-$400,000 home, or whatever the value of the home is. We can tell you, hey, if you filed and showed only $10,000 in income last year,
Mm.
well, let me show you what you need to file this year, so that between those two, as that averages out, you can afford the home. You can qualify for the home that you want to purchase. You can qualify for the loan amount that you need in successfully purchasing and reaching your goal of home ownership this year. So that's really number one most important thing, is that we can guide you in letting you know that, hey, you need to show 80, $90,000 in net income this year, versus you just thinking that, well, I need to show the max. Maybe I need to show, maybe I made $150,000 last year. I need to show all of it. No, that may not be so. And we can, and again, we can help you with, so that you don't have to pay taxes on that 150,000. Rather, you just paying on that 80 or 90,000, wherever you need to be to attain your goal. So that's one guidance, one way of being able to guide people prior to filing their taxes.
Yeah, man. I know sometimes it might hurt. It's gonna hurt,
Mhm.
guys. I ain't gonna even sugarcoat it.
Yeah.
It's gonna hurt, especially for the entrepreneur. That you usually, I know from my own experience, you usually go into your account like, man, I want to pay as least as I can pay, you
Hmm.
know, and man, I've seen my accountant work wonders, but it works two ways. You know what I'm saying? Yeah, you can get away with those years where, hey, you might not have to pay nothing back. But guess what? If you decide you want to buy a house, they're going to be looking at the same paperwork that you submitted to the IRS and say, well, man, it's showing that you were in the red last year, you know, or it's showing that, you only made this amount last year. And now you really want to purchase that home. So like Gavin said, it might pay for you to go ahead and talk with your lender and see where you need to be, what you need to file in order for you to be in the best position for next year. You
Hmm.
Yeah.
know?
So one of the things
Yeah.
I would add to that as well is just like, just like if you're a W-2 employee, or if you're, starting the process, you have your team, right? You have the real estate agent and your loan officer working together to help you to purchase that home. Same
Yeah.
thing with the tax person. If you're self-employed, you need to now add a third person to that. You need to have your real estate agent, you need to have your loan officer, and you need to have your tax person all in communication together,
Mm,
because that tax person needs to know, hey, I want to purchase a home this year. Well, how
mm,
do I accomplish both? Because there are some very good tax professionals out there that can assist you with your taxes, that has a real estate background. They understand from a mortgage perspective what
Hmm.
those taxes need to look like, in conjunction with you not having to pay back an arm and leg, because there are certain um, things that you can write off that we add back as lenders that doesn't deduct from your income. And
mm.
if your tax person is good and they know what they're doing, they can be able to guide you and advise you accordingly.
That's
They're
good.
also, when it comes to the tax returns, it's also based on the loan program. Not all loan programs require 2 years of tax returns. That
Right.
is a huge misconception, that you truly need 2 years of tax return. By standard, just documentation that we ask for, we say give us 2 years. But if your credit is good enough to go conventional and you've been in business for at least 5 years, we only need 1 year. So if you
Hmm.
go and file your 2023 taxes, then we can just use the most recent year that you filed. We don't have to go back and try to get 2 years of taxes. And that can be super important. If you have not filed taxes and you want to buy a house using a traditional loan program, you need to file your taxes. You can't
Mm,
say, oh, I got an extension and it's like 2024 and you ain't filed taxes since 2019. You can't do that. You have to file your taxes. And the reason for that is, once you own a house, your house is considered an asset. And when your house is an asset and you owe the IRS money, they can seize those assets. And
Right.
so we, as a lender, we have our lien against your house. So even though you own it, we are a lien holder as a part of that transaction until you pay that loan off. And so we don't want to put the investment that we gave you into this property in jeopardy, because you owe the IRS money and they can try to foreclose on your property and take it. And so those are the reasons why we ask for the information. So making sure that you have those financial records in place is super important. And you should be doing that throughout the year. You should have proper. You should have a honestly. You should have a bookkeeper if you're not going to do it yourself with your own QuickBooks and things like that. And you should have a tax person, and they should work, you know, together to make sure that you achieve what you're trying to achieve. So that's one. The next is going to be your credit profile. So credit is important. Now credit isn't everything, but it's super important, especially when you're self-employed. If you're self-employed and you're trying to buy a house, and let's say your income is a little lower, or you're not reporting or showing everything, trying to have a higher credit score is going to help as well, because as I mentioned before, there are some other alternative financing, or we can try to look at conventional loans, but usually those loans are going to require a higher credit score. So.
Okay. More great information.
Yeah.
So we're definitely honing in on self-employment. But I mean, we know that we're like you said, Wilmot, you're self-employed. LaShawn and I, we're running a business.
But we're W2.
but we're W2. But so let's talk a little bit towards
W2 too. So I know where you're going. I'm W2 too. So yeah,
right.
I know what you're saying though. Yep.
Right. So let's talk more to our W2 listeners out there. So guys, I mean, it's not as your income is what you made throughout the year. Important factors in regards to your income is when it comes to preparing yourself for home ownership. It's all about stability. It's all about was your income fluctuating in this previous year, or were you working 40 hours a week? We came off of the COVID years to where in some professions hours were cut back. People weren't working steadily or as expected on a 40-hour work week, and that caused a lot of kind of chaos and confusion when it comes to being able to qualify someone because your income wasn't stable. It was
but what about what
variable.
I've seen sometimes too, what about you have people who are W2
Mm-hmm.
and they're self-employed, because you talk about COVID. Ever since COVID, a lot of people have
side hustles.
got a side hustle that may have truly became their main source of income, even though they on paper have a W2 job. So the rules are kind of a little, they're the same, but it's different when you're carrying both, if you're self-employed and a W2 employee, right? Because typically, no matter what, you have to show a 2-year history, right? You can't just all of a sudden start a business out of the blue and just want to use that income right away, right?
Mm-hmm. So you either have to have a 2-year history of W2 employment, or you have to now have a history of self-employment. It can't be mixed, because they're two different income types, and they have different. Like you said, W2 employment is most rarely going to be stable. It's going to have stability, because there's a set expectation that you're going to show up to work this many hours, and this is what you're going to get paid. However, self-employment can vary on your type of business. If you're a hairstylist, or depends on how many clients you take in on a day-to-day basis, or can determine what your income is. Definitely great point pointing out. And if you have both, guess what? Yes, you can qualify if you meet the requirements to use and get qualified based on both incomes. So that's also important.
I'm so glad we're really going in depth about this, guys. I'm gonna tell you why. Because after I speak with a lot of different people on a weekly basis, and they ask me questions like, and then a lot of times it goes financial, because you need money to buy a house, and one of the things I like that I like that we're educating people on is that, hey, before me the realtor can do my job, you have to first be ready on the financial side in order for me to do my job.
Mhm.
Okay. And also I want to encourage a lot of people out there, if you're watching this and you're on the sideline, whether or not you should talk with a lender, let me change that mindset. Okay. Because the longer you sit there and you think about what do I need to do, and you try to fix it yourself, like I need to
Mhm.
fix my credit, or I need to fix this, or I need make sure I'm on my job, or nah, man, don't waste time in doing that. Call a lender, a trusted lender like the Abrahams up here, that can really like give you a strategy on how to get you into a house.
Mhm.
Okay. Once they get you taken care of, then I can run for you on the real estate side to find the home that you really want. So so guys, really take what they're saying seriously. And if you need some more guidance, they are more than happy to take your call and kind of walk you through that process and look at your financials. Because guess what? They're the ones that's going to lend you the money.
All right.
That's
Yeah.
some good sound advice, Mama. Like
Yeah.
I really
So
appreciate
so
that a lot.
let's give them a little bit more advice. So again, we talking about tax planning. We're talking about home ownership, and we're talking about the excitement of you getting your money back from the government that you let them hold all 2023. So
Mhm.
what we doing with this money? What we doing with all this refund money that we're getting? We are we going to we going to the club? We going to make it rain? Is that?
No, don't do
Oh,
that.
No, no,
I mean, I know the vision board, says home ownership is the goal in 2024.
Mm-hmm.
Now, I need to make what's my action plan to make sure that mirrors with what I'm doing with my refund this year. Because of
Yep.
course, I got bills I need to pay. I got stuff I want. I got trips I want to take.
Mm. Mm, mm,
Man,
mm.
I get it. I got a laundry list of other
Man,
things I can put ahead of home ownership. But
I
how
can go.
serious am
I
I
can
about
go.
home ownership?
I can go off on that one right there. Yeah, some trips I want to go on, boy. Some trips.
Yeah.
Some.
Talk
I
about the
know
word sacrifice,
some some
sacrifices.
bags, some bags they want to buy, some
Yeah.
shoes they want to buy. You know what I'm saying? But hey,
That
guys,
deposit down on buy the car,
like, hey
listen.
man, it's nothing like, and I'm not saying this. I'm here in my house right now, and it's nothing like being able to say, hey, this is where I lay my head every night, and me, I can go home to my family, and they can enjoy. My kids can go to their rooms. Simple stuff like that. When my wife can
Mm.
and I can cook in the kitchen, our kitchen.
You
You
cook,
know,
Mama. You cook.
I cook a little something. I try to do a little something. I can do breakfast.
Breakfast.
uh, typical
And
man, typical man. I can fry some eggs.
I can grill. You know what I'm saying? I can grill. But my wife is the chef. So
Mm.
I leave the more advanced stuff to her.
Yeah,
So
we just
yeah,
stay in our lane.
I just keep it simple. You know what I'm saying, Gavin? Just keep
Hey,
it simple.
gotta do what you gotta do, brother.
You
He
know?
understands. He
Yeah.
understands. He can relate.
Absolutely. Yeah, but yeah, man, just being smart, in regards to our decisions that we make, because we do
Mhm.
have some decisions to make here in February, March, and April. Um, as
Now,
we,
before you go too far off of it, because I mean, and I know you tell me I cut you off a lot, so I am
yeah,
sorry,
the
sweetheart,
people
for
know
cutting
this.
you off.
Everybody knows this.
But
Gavin, that's the
I'm sorry.
wife. You know how that goes. That's the wife.
But I wanted to make sure we had the point because you mentioned, I mean, you said something like you have this tax refund money instead of going out buying the shoes, buying the bags, doing whatever with it. Why is it important to hold on to that money for home ownership, right? Because there's the down payment involved, and there's
Hmm.
also something called reserves involved as well. And so there's all kind of programs out there, of course, that may be able to assist you. But we'll keep preaching this same little message. You need money to buy a house. You need money to buy a house. And
Yeah.
so if you know that you're getting back, a few $1,000s, like let's put this aside. I do not recommend people, taking matters in their own hands, exactly what you said, and going out and start paying off stuff or doing all these things that they think is going to help further advance them without you speaking to a professional that can truly advise you based on your situation, based on your credit, based on how much of a house you want, based on how much you got in the bank account already, where you need to be and what you need to do.
Yeah.
Don't go doing that stuff prematurely, because sometimes it's a waste of your money and it's a waste of your time, and all you're going to do is end up frustrated. So before you get too far down the road, if you know that you want to buy a house and you know that you're getting a tax refund back, stop. Give us a call. Let us walk you through that process. Let us advise you. Let us guide you into what you need to do.
Yeah, man. It's a
Mhm.
beautiful thing. I can't say that enough. It's a beautiful thing to be able to be a homeowner and
For
have some
sure.
place. If you have a family, man, it's a beautiful thing to have your family come over, especially for holidays. I don't know
Yeah.
if y'all host anything at your house for holidays,
Mhm.
guys, but I know we did Christmas Eve at our household, and it's the memories that you make in the
Yeah.
house too, man. Like stuff you can't buy, you know. So it's a beautiful thing. That's all I'm gonna say.
I
Yeah.
love it. I
Yeah.
absolutely love it. So, I mean, let's get started. Let's plan for the future. So, that's really all that we have for today.
Mhm.
Unless you guys want to add anything else
Nope.
to it,
Just
Nope.
put that plan into action to
Let's
put it
go.
in that.
to mirror the goal that you set out for 2024.
Yeah,
Like I
Absolutely.
said, if it's home ownership, do something with the money geared towards your goal of home ownership.
yeah.
Don't
I'm gonna
buy the
say
shoe, don't buy the bag.
I'm gonna go, no by the back. I'm gonna say just to close out this goal series we had. Hey,
Mhm.
first set the goal,
Set the goal.
have the plan,
Have the plan.
make the strategy.
Make the strategy.
That's it, guys.
And then last, give us a call. Right. Give us a
Absolutely.
call so
Absolutely.
we
Give us
can help you navigate these goals that you have written out, planned, and strategized. Give us a call.
absolutely. That's it.
So yeah. All right, guys. Until our next Teach Me Tuesday, you guys have a great week, and we'll catch y'all next time.
All right, peace.